Kia ora, ngā mihi nui, kia koutou katoa. Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. Sharesies is a wealth development platform whose purpose is to create financial empowerment for everyone. My name is Frances Cook. I'm investments editor at BusinessDesk. For those of you who are new to Shared Lunch, we do these every Thursday at lunchtime. Each week, we alternate between an interview with a company leader and then an industry deep dive. Now, to celebrate the launch of Shared Lunch, we have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SharedLunch100, all one word, SharedLunch100, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST. The offer only applies to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts. Now, before we get started, here's some important information. Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording. Also, just a quick reminder, if you have any questions for our guests today, you can submit them through the Ask a Question button down below. Don't leave questions in the discussion area as they are likely to get missed, and I don't want to miss any of your fabulous questions. We've already got a couple. Let's get some more in there. Please do be kind and respectful towards our guest and your fellow viewers. Otherwise, we will unfortunately have to take steps to remove you from the webinar. Now, today we're joined by Mike Fuge, who is CEO at Contact Energy. Welcome, Mike.
Kia ora tata. Good to be here.
Fabulous to have you with us. Now, you've spent a lot of time in leadership roles across the energy and electricity sector. Quickly whip us through some of these places that you've worked, and then I'd be really interested to know, what is it that attracts you to this sector?
Right. So, yeah, I have worked across the world, obviously, UK, Europe, Middle East, Southeast Asia, South America, Australia and New Zealand, in a wide range of energies. I always joke that the only energy I have not been ever involved in is nuclear, and geothermal with Contact Energy pretty much completed the suite. I have no desire to ever do nuclear. And I suppose that leads into what had attracted me into energy in the first place as a graduate in New Zealand. Just the dynamism. No day is ever the same, particularly as this week or the last 2 weeks have illustrated. Every day you wake up, it's a different day. I think particularly in this day and age, in the age of transition, as we call it, it's a particularly exciting time to be involved in the sector, to be helping both New Zealand but also global energy sector decarbonise and being very much part of that. That's pretty cool.
Yeah, big changes happening at the moment. And of course, as you mentioned, now that you're at Contact Energy, you arrived, of course, February 2020, right before the world tipped upside down. So tell me about Contact, what you do there, and also, is there anything that people ever assume that Contact does that you don't do?
Okay, so Contact's a fascinating company. We were the first one independent from the state-owned energy sector. We're 25 years old, and we were gifted, when we were established, three things. We were gifted some cracking hydro assets down in the South Island on the Clutha River, Clyde and Roxburgh. We were gifted a lot of thermal generation around New Plymouth and Taranaki. And we were gifted both existing geothermal assets, but a whole lot of access to geothermal resource. And over the last 25 years, what you've seen from Contact is we have developed that geothermal resource, and we have very deliberately and very steadily moved out of thermal, where it now forms a very small part of our portfolio. And our aim is to continue that journey. We also have a great retail arm. We are New Zealand's largest electricity brand. We have gas, we have LPG, but we also, what people know, we're New Zealand's fastest growing broadband brand. We now have 67,000 broadband customers. And the retail arm of the business is just gone through a major rebrand and continues to go from strength to strength. What I always say to the people that work at Contact, we are a mirror image of New Zealand. We have employees the length and breadth of this country. They reflect every part of the makeup of this country, both from a gender and a racial perspective. We are on a journey of decarbonisation, just as New Zealand is 83% decarbonised in the electricity sector. We're 83% decarbonised, and we have a strong aspiration to close out that last 17%. Right now, we're in the middle of a good run, obviously, financially, but we are investing to develop that geothermal resource. We're excited is very low carbon. It's important to understand that the carbon content of the geothermal we have at Wairaki and Tauhara Fields is between 30 and 50 grams per kilowatt hour. And if you think of thermal generation, that ranges between 300 to 1,000 for coal. So it is very green and it is very renewable.
Interesting stuff. And we have also seen, let's dive into the numbers, because we've had a lot of half-year results recently. And for Contact, yours showed a significant boost to profits. So congratulations on that. What's behind that?
Right. The important thing behind that is, number one, we made some portfolio choices a couple of years ago where we realised that we felt that we were short of fuel. So we pulled back from what we call the commercial industrial sector and went into what we call CFDs to protect our fuel position. That paid big dividends because it gave us some generation length as prices increased. And we were able to use our range of assets to sell into that, which has led to an improvement in the profitability. The other thing is, and it's always in the energy industry, it's about controlling the things you can control. So the plant uptime's been excellent. Our cost control has been very strong. We've managed to keep OPEX flat, particularly in the retail arm, where we have grown our market share or the number of connections we have by over 10%, yet we've managed to keep our operating costs flat. And yeah, that strong brand has also helped carry us through. So it's a result that we're very proud of.
You mentioned there about CFDs. What's that, and how has it been useful?
That's a term we use. It means contract for difference. So you sell that product to other generator counterparties, and effectively the contract for difference is whatever the price is on the day versus what you've actually struck in the contract. You pay each party pays each other the difference.
Oh, right. Okay. So you're getting into some interesting technical stuff there, but it's obviously working out for you. One of the other strategies that I've seen that I found very interesting is your business locking in some long-term contracts with major power users, including companies like Foodstuffs. Now, is that right? And why use that strategy?
Oh, that's one that obviously it's very common overseas internationally. And that was, again, that whole idea of integrated portfolio management. And one of the things that we have a belief in is that, high energy prices may be very attractive to energy companies, but the reality is they're bad for everyone. And those long-term contracts that we entered into mirror what I used overseas to get renewable energy projects off the ground, because if you can give revenue certainty against a project, if it's got a good counterparty, if it's inflation linked, then that certainty of revenue is valued both by investors and that banks. And so we've got probably about 10% of our portfolio now covered by those very long-term contracts. And they're good for both parties because it means they get more price surety. They definitely get a sharper price. We get the benefit of that surety of revenue over the long term, which in turn is valued by our investors, but also by lenders.
Interesting. So if that's making up about 10%, the other 90% is made up of What sort of customer?
So about 40% to half the portfolio we sell into mass market retail. So the roughly 400,000 customers, or the 570,000 connections we have, they make up about another 40%. About another 15% we sell into mass market, commercial, industrial, and that number will go up. And the balance we sell into either the spot market, or we sell to counterparties through those CFDs I talked about before, or we sell it on the futures. So you can see just in those allocations, there is quite a balance across those different, what we call channels to market.
It's interesting stuff. And of course, if we're talking about a long-term customer, I feel like we have to talk about Tiwai Point, which looms large over really any chat about electricity in New Zealand. They are an aluminium smelter, massive electricity user, and it always seems like they've got their finger on the button. Will they or won't they stay in New Zealand? They said they were going to be leaving in 2024. Now they might stay again. So where is that conversation at from your point of view? How is it going to impact your business? What plans are you making?
So we plan, it's slightly schizophrenic. We plan for both scenarios. Are they in or are they out? We might be swinging towards are they in and staying, which does create a range of opportunities to bring forward renewable development projects, which we're excited about, both wind and geothermal. The likelihood is, look, aluminium prices, and particularly the spread between aluminium and the bauxite, have just skyrocketed since the last deal was done. You've also seen a pullback from smelting in China because they're trying to restrict the output from their coal plants. You've also seen events of the last 2 weeks where we no longer have access to Russian aluminium. And you've also seen the world getting quite anxious about the amount of aluminium that is actually produced using coal-fired electricity. And so suddenly it's moved from we're going to close to actually that smelter down Southland, and with its 100% hydro-generated electricity, looks an incredibly attractive proposition. Notwithstanding the fact it's also producing the purest aluminium in the world, which is an important component of things like the mobile phones you're watching us on today. So there's a lot of factors moving in favour of the smelter staying, and that's the conversation that I think we'll be having. I actually think it could be a very positive conversation, because if you think of that long-term contract we talked about, Rio Tinto, the owner of the smelter, they have a very strong balance sheet. If they entered into a strong long-term deal, then any number of new renewable projects could be developed off the back of that. And that in itself could be very exciting.
Interesting. And it's interesting that you mentioned there about that it's, being so renewable is a real plus point, because I do think that is something that we are seeing more and more of, this push for more sustainable, greener energy options. And you do have some more big projects in the works there. We've got the Tauhara geothermal power station and the large-scale green hydrogen plant planned for down in Southland. And I think I'd like to start with green hydrogen. I think is a new one, not just in New Zealand, but actually internationally. Let's start with, what is that and why are you exploring it as an option?
So the reason we are exploring it is it came out of the fact that the smelter looked as though it was going to leave, and we, quite frankly, without the transmission, most of the electricity would be spilt as water. And so it was looking for a use in Southland that we could establish. It's got a deep water port within the region. It's got fantastic transmission. It's got great services, very highly skilled workforce to support a new industry. Hydrogen was interesting. It's been around as a topic, but green hydrogen is simply hydrogen produced by the electrolysis of water by electricity. It's as opposed to grey or brown hydrogen, which is produced from natural gas with a high offtake of CO2, or blue hydrogen, which is produced from natural gas, but you capture the CO2 and put it back in the ground. But green hydrogen has no associated CO2 with it. It's simply from the electrolysis of water. Now, when we started it, it was very theoretical. It was very hypothetical. And where we've ended up over the 2-year process is we've ended up with 4 potential tenderers who are all incredibly credible international companies. Linde BOC, who makes the most hydrogen in the world at the moment, Mitsui, a Japanese company with strong investment in potential hydrogen projects in Japan, Woodside Australia, with their deep LNG experience, and Fortescue, where their owner Andrew Forrest, has set out a clear strategy for hydrogen investment. And so the world has also changed in that period. So we've moved from hydrogen looking quite expensive as a fuel against, say, cheaper natural gas to actually green hydrogen produced in a very stable country like New Zealand, with sea lanes up to Japan and Korea, which don't go through slightly more politically fraught shipping straits, suddenly looks like quite an attractive proposition given what's going in the world and the spike in energy prices. And so we're now looking at it going in the same way in the 1970s with OPEC and the Iranian Revolution causing the same sort of shock, gave birth to the LNG industry, the liquefied natural gas industry. Even though liquefied natural gas was horrifically expensive, it looks like that same scenario could play out again for green hydrogen. And it's not smelter or hydrogen. We think we can do both.
That's exactly what I was just about to ask. If Tiwai is now sticking around, does that impact on your plans? Could it make things bigger or smaller, even if you're still going for it?
It would make things bigger. The thing about Southland and Northland, for that matter, and Southland has 3 to 5 terawatt hours of undeveloped wind resource. It's what we call a type 2 wind resource. So it's a lower speed. It's not like Wellington, where we're based, but it is slower, but more steady. And that's where all the wind technology over the last 25 years has developed in Europe and mainland USA. And so that there is that opportunity to pair that wind development with a combined hydrogen smelter industrial complex down there and stimulate the development of renewable energy there. And we could see that also being replicated in Northland, where you have both, again, those what we call those type 2 winds, very steady, and a cracking solar resource as well.
Fascinating stuff. How hard is it bringing these sorts of projects online? Because obviously with the Tauhara geothermal power station, costs have gone up a bit more than was originally thought. The expected timeline has gone back. What happened there? And do you think it'll stay on track from here?
Yes. And just to give you, so the good news part of that cost increase was the field that we're drilling into has turned out to be bigger and hotter than we anticipated. And so about $40 million of that cost increase was due to the field's bigger. We had to drill more wells. We have the flow lines, the pipelines, which we connect the wells to the plant, are longer. That's a good part of the story. And remember that those geothermal plants, Wairākei has been with us for 60 years. They're not 25, 30-year projects. They do last for a very, very, very long time. The second aspect was the project was divided into 3 parts. One was the drilling. We've drilled the wells, great resource, cracking outcome. The EPC contract for the main powerhouse, that's a lump sum, fixed term contract, minimal risk. And the last part is what we call the balance of plant, but it's what we call the flash plant, where we capture the steam, drop out the water, and do it. Now, because of the richness because of the what we call the high enthalpy, because of the very high temperatures in the steam, we chose a triple flash plant, which means it goes into the turbine and out 3 times, and we drop the water out each time it comes back. That was more complicated than we anticipated, but we get 8% more energy as a result. And the other thing that's happened is post-COVID, everyone's building in New Zealand, labour rates, supply chains, materials, everything's gone up. And so that, what we call the balance of plant, did go up a bit in cost, but we think that we've got that well in hand. The team had to be a bit creative. They, instead of just putting out a contract and saying, come and bid, we actually had to go and look at the contractors and match the scope with the capacity and the capability of each contractor, which was quite innovative, particularly in a New Zealand environment. And I'm delighted with how they turned that round, particularly over Christmas, New Year.
Oh, good on them getting that sorted around that time of year. I feel like New Zealanders love to go off and enjoy the holidays, and good for them, but it does make sometimes these projects a little trickier. You've mentioned a few times about, sort of the world environment, and I think that does always impact on these businesses, your big businesses like yours. And obviously, another pressure right now is what's happening in Ukraine. And I think we have to obviously say human life is the most important thing. We are all hoping for a peaceful end to this conflict. One of the other impacts after that, though, is energy prices. Russia is a huge supplier of oil and gas. They're getting hit with sanctions at the moment, seeing prices shoot up. Will all of that impact on your business?
Yes, it will in the long term, probably in a good way. So if you look at what's happening, you obviously have the spike in prices at the moment. And the most interesting thing is the spike in the price of coal from about $100 plus carbon to $400. And so in the New Zealand energy system, normally coal gets dispatched after renewables, and then gas provides what we call the marginal pricing. Now coal has flipped over the top of that, and that $400 is the marginal dispatch. So that could lead to quite a bouncy winter. In the longer term, what we're facing with Russia and the long-term sanctions is exactly what the world faced when Venezuela and Iran went belly up. And they were large producers of oil, and under sanction regimes, that oil, and with a lack of investment, a lack of access to technology, they experience what we call exponential and hyperbolic declines in their oil production rates. And that's what will happen in Russia over the next 5 years, is that the production will decline quite quickly from 6 million barrels a day to probably 1 million barrels a day where it was at the end of the communist era. The interesting thing is the same thing will happen to their gas. They weren't producing a lot of gas 30 years ago. That gas is likely to do the same sort of decline. And that energy inherent will have to be replaced, which means more will come out of the Middle East, obviously. More LNG will be produced, which is very expensive gas. But most likely the oil will come from the Permian Basin in the US and things like that, where the marginal barrel typically costs $80 to $90. So we're going to be in, I think, for quite a sustained period of high prices. For us, that means that if we're dispatching gas and even coal, which has rocketed through the roof, it's going to put a strong incentive to really accelerate those renewable energy projects, which we have, which is a good thing in the longer term. It's just going to be a bit painful in the short term.
Right. Okay. So what's your average customer going to notice, and how long is it going to last?
Well, our average customer is well protected because they operate in what we call the mass market retail. And even though you see a lot of drama in what we call the wholesale market, where prices fluctuate from $0 to $300, retail prices have actually gone up below the rate of inflation over the last couple of years in particular, because it is intensely competitive. And the last thing you want to see is energy poverty in households in New Zealand. I think what is more concerning for households is the high inflationary environment at the moment does put pressure on those retail prices. I think you'll see those rise, hopefully at a pace less than inflation, the headline inflation rate. And then I think you will see them steady out as more renewable generation is built and the wholesale market has a chance to stabilise again.
Okay, yeah. Interesting that you mention the wholesale market there, because there has been a little bit of pressure, I feel, on that. Some rumblings around the industry that wholesale electricity prices are quite high. Some analysts have said there's a risk of government intervening on the issue. So what do you think? Are those wholesale prices high? Has there been any approach or signals from government that they're watching? Do you think they'll step in?
Look, I think mass market retail has been well protected. We have very strong market mechanisms. People are able to hedge in long-term contracts for the ASX, and we have a thriving tier 2 market, which is awesome. I think in the wholesale market, yes, some industries have been caught out. I tend not to have a lot of sympathy for them on two counts. Number one, let's go back to where we started. We have been offering long-term 10-year PPAs at very sharp prices in that same period of the rapid spike in wholesale prices. Almost all those industries, all those entities had the opportunity to come to us, sit down and have a chat and put in place a very reasonably priced long-term PPA. Only one or two, like Foodstuffs, like OG, Pan Pacific, took up that offer. And so, you know, one of the things we have to do as a commercial entity, when we buy foreign currency, we always hedge because that's a sensible thing to do. We try and beat the market. We just say we're not foreign currency experts, we hedge. And really good CFOs, if they're looking at energy prices, really should be adopting the same attitude. And the other thing I'd say is that for a lot of those entities, on the other side of their ledger, they're experiencing a boom in commodity markets at the moment. So on the large-scale industrial users, that some of which have got a bit noisy, there's not a lot of sympathy. They had the opportunity to participate and buy PPAs. They had the opportunity to hedge, and actually most of them are making really good money at the moment from the commodities they produce. Mass market retail, I think we have to nurture that through. We do have to protect the average New Zealand consumer, and we all recognise the need for that. And the reality is you can't regulate away a shortage of energy. If your marginal coal is $400, if you're having to dispatch oil or diesel generated electricity, it's going to be expensive. The best thing you can do is respond to that price signal and build more renewable generation.
So do you think the way to sort of bat away any possible government intervention is to look after that New Zealand household and then make the long-term contracts with businesses? Is that sort of the strategy?
So three things there. Yeah. Number one is, yes, obviously look after the consumer while trying to get a fair return. You don't want subsidised energy prices in any part of the economy. Number two is build, invest. Take the opportunity to invest in new renewable generation. If you were just squirreling the profits away, there might be a slight ethical issue there. But yes, if you're investing, if you're taking that money and investing it, as we are, in new renewable projects, that's a very virtuous cycle. And the third thing is, as you say, large-scale commercial industrial users can help by signing up to those very long-term, what we call PPAs, power purchase agreements, which enable what we call project financing of new renewable energy projects.
All right. And I just say for our listeners here, we're almost getting to the point where we will be jumping into your questions. So if you've got a burning question, you haven't popped it in yet, pop it in that ask a question section. And if you are having a little look at the question section as well, feel free to upvote the ones that you are interested in. That does help me see what you guys are all keen to know. Now, Mike, before we jump into that, basically just get your crystal ball out for me. Next 12 months, what's on your radar, both good and bad?
Oh, look, I'm excited by, so they are related. I think we are going to see a sustained period of high energy prices, and that will flow through to all parts of the market. And hopefully we're able to control, particularly for the ordinary consumer, those price increases at or below the rate of inflation. But that will lead to, I think, one of the most exciting periods in the energy industry here in New Zealand, where you see a rapid build of new projects. So we're building Tahara. We are looking forward at bringing forward a couple of other geothermal projects, Te Huka 3, and we're looking at rebuilding Wailaki. We're also we've now got a wind portfolio of wind developments, which is 600 megawatts at the moment. We'd like to get that up to a gig, and we'd like to start building those. So what the exciting part of that is you'll see a rapid uptake of growth. So it's a great opportunity. It's a great time to be involved in the industry.
Fantastic. All right, we're going to jump into the audience questions now. And we have to start with this question from Albie because it's got 13 upvotes. So thank you everyone who's participated in this. I think you might have addressed part of this, but I'll just read out the whole thing. One, is Contact going to invest in hydrogen manufacturing, or is it going to source hydrogen from Australia? And two, what is your opinion about the future of fuel cell technology for New Zealand?
Okay, so let's divvy that up. So the answer is we'd like to see hydrogen produced here in New Zealand. We see the opportunity for international export, but also the development of a domestic hydrogen industry for things like the production of fertilizer and the like, which leads into the second part, because where hydrogen has a real niche application in transport is in heavy transport. We don't think conventional batteries will ever replace very heavily powered diesel trucks and buses. And those fuel cells effectively will become the batteries of very heavy transport because they are so much lighter. And so we're looking at potential trials getting underway in Southland with with transport operators about how we can trial that technology and learn a bit about how that whole ecosystem domestically with hydrogen could work.
It's fascinating stuff. It's an area that has got so much change happening at every moment. This question from Danny P, I also think is a great one. I'm loving the very technical questions here, guys. You've obviously done your homework. So with current volatility in the Northern Hemisphere energy markets, what opportunities or challenges should we be thinking about for clean energy infrastructure in Aotearoa? And how do you foresee earnings performance in the short to medium term for Contact? So a little bit of a 1-2 punch there. Address whichever bit first you would like.
So number one, our earnings let's reverse it. Our earnings performance over the next 3 years, particularly as Tahara comes on, we expect to continue to remain very strong with the sustained prices, and also as we replace, if you think we're effectively replacing our thermal fleet with let's say a marginal cost of between $90 to $150 and replacing it with geothermal, which has a marginal cost of $18, obviously that underpins profit growth. In terms of what we can do in New Zealand, it's build more, build faster, where there are opportunities to do it. Now, where that puts a challenge down to someone like Transpower, who builds a grid, is maybe that plans that they had for a decade or 15 years about when they would upgrade different parts of the transmission. One of the challenges for government is, what about bringing all that forward? What about building before you need the transmission so that the geothermal plants, the wind farms, the solar farms can be brought on earlier? And that's an interesting question for both the regulators and the politicians.
Yes, yeah, it is one that I think we're going to have to see some, there's going to be some political movement, I think, on this one. We're seeing a lot of talk on these sorts of infrastructure issues that we have just let lie for a long time. Now, on that, about the grid, this one from Fiona, why is 1-to-1 not paid for solar providers? So I think what we might need to do there is talk a little bit about how the solar payments work and then jump into why is it paid in the way it is.
So I'm just unpacking the question. Your typical energy bill is made up of two components. One is the energy component, which we produce, and one is the lines and transmission component, which Vector and Transpower provide. So when you put solar on your roof, what you can save, what you produce energy, and that's what effectively we pay you for. If you export that energy, we pay you the 8 or 9 cents a kilowatt hour or the 10 cents. What we can't pay you is, or we can't refund the lines charge of your part of your bill, because you're still connected to the grid. You still have that connection. Everyone has to still pay for the wires, the poles, the cables, the trenches, the transformers, and all that infrastructure. And so when you put solar on your roof, the best thing you can do is actually use it in your home if you possibly can, because then you save the full 25 cents. And if you can store it as hot water, or if you can store it or running your freezer and your fridge at certain times, if you can put a battery in there and use it in the home, that is always the best way to get that full 25-30 cents for your solar. But if you export it, you're never going to get the lines part of that bill back.
Yeah. And it's quite interesting, isn't it, with people more working from home, because that has been one of the issues with things like solar, is it's produced during the day. So it has been better for potentially retired people until now, but now more people are working from home, and we're seeing these big changes with the impacts from COVID. And I'd love to know, there's a great question here from Jason. How do you see changing consumer demand or behaviors affecting Contact Energy when it comes to retail and broadband as well? What does Contact Energy have planned to adapt to that? So both of your businesses here really could be impacted. What do you reckon?
So that's why. So you'll have seen our new branding, It's Good to Be Home. Because actually we do have a passion about Kiwis' homes, and part of the thinking is that we just don't want to supply electricity to your home. We want to help you with the ecosystem that is your home. So if we're providing the broadband, that gives us the chance with you to link up to your smart appliances of the future. That gives us the chance to help you charge your electric vehicles, which you'll all own one day, at the right time rather than a peak time. That potentially helps us heat your hot water at the right time of day. It helps us make sure that you've got hot water for your shower in the morning or the evening, but that you're not overheating the water during the day. It gives us that chance to be part of the ecosystem that is part of every Kiwi's home. And with the advent of batteries in the home, with the advent of electric vehicles, with the advent of smart appliances, we want to help people. We want to enable people to end up with the most efficient homes possible. And so having broadband, having wireless broadband, which you might see in the future, providing electricity, having smart meters, people buying smart appliances, people plugging in their EVs, that becomes an ecosystem, which if we can help ordinary Kiwis do that efficiently and intelligently, then there's a real opportunity for ordinary Kiwis to help the country decarbonise.
Interesting. So do you think that's in terms of offering sort of price incentives or products, or is it literally having conversations with customers? How does that work?
So it's all of the above. So we put out a pretty brave product, actually, in hindsight, what we call Good Nights, where we gave people 3 hours of free power between 9 and 12. Now, we may have got the pricing just a little bit low because we went from 0 to 25,000 customers on it within 3 months. And every student in the country, as they go into their flats in Otago, seems to have signed up, which is great. But what we have seen is that people genuinely have shifted their load to that off-peak time. People have genuinely shifted their load. You put a bold, aggressive offer like that, and they say, yeah, we'll give it a crack. It's not a free hour of power, it's 3 hours. We think we can do something with that. So that's number one. So that's a product. Number two is, I think there is a real opportunity for apps operated from your mobile phone, using the broadband to talk to the smart appliances, to your EV charger, and get the timing all right. And most likely, I think the early adopters will be quite interested in the timing and setting it all up. I think most of us will just say, give me an app that does it for me, and just don't make sure that my beer's cold at night, that I do get a hot shower in the morning, and if possible, could the house be warm when I get home at night? And if you look after those outcomes and give me a good electricity bill, that's pretty cool.
Now we are almost running out of time. There's so much more we could talk about here, but I'd like to hit this this question from Paris. What is the biggest financial impact on Contact Energy performance in financial year 2022, including both positive and negative?
So FY22, obviously the strong generation and wholesale performance. So keeping our geothermal, our hydro assets and our thermal assets in the market, producing electrons. That's absolutely key, particularly in a period of what likes to be pretty sustained high prices. And equally, that's probably the biggest risk for the company is if any of those turbines pack a sad or break down on us, that can introduce an element of risk to those earnings. We try to take care of the things that we can take care of. So we've got the best cost performance of our peer groups in both generation and mass market retail. We have strong asset management programs in terms of keeping the turbines well maintained and making sure that they can turn when the resource is available. But both the opportunity and the risk are in the same pot there.
Love it. All right. I reckon we can squeeze in one more question. Both of the top two questions are fairly technical. So if you can answer them in as little technical way as you can so that we can include all the audience. I'm going to go for solar again because people seem to be very interested in that. Grid scale solar projects struggle to get off the ground as they struggle to secure 15+ year PPAs needed for project finance. Has Contact considered offering PPAs to independent third-party generators to support the growth of renewable generation and then on-sell the electricity to your existing client base?
We look at all opportunities. Actually, in a previous role, I've built one solar farm, 100 megawatt solar farm. The challenge with solar in New Zealand is you've got to have four things. You've got to have reasonably flat, cheap land, and most of our land is used for other things. You've got to have good transmission and good connection. And then you've got to have good resource. Now, much as we all love this country, we don't have the same resource that Northern Queensland has or the Atacama Desert has in South America. So the resource, and unless you've got at least 3 out of 3 on that, the project economics in themselves won't fly. Yes, long-term PPAs are important. Yes, they do enable non-recourse project financing, which enhances the equity returns. But the project itself has to have those fundamentals first and foremost. We're interested in both sides. We're interested in being an equity owner of solar. I've built solar before. We're interested in potentially PPA offtakes if it makes sense for us.
Right. So would it be fair to say that you see the renewable energy opportunities being a little bit elsewhere in New Zealand?
Oh, no, solar's got some advantages. It's easy to build, and it can be built quickly. And so if you think of a geothermal project, which might take 5 years from go to woe, or a wind project 4 years from go to woe, if you get your resource consent for a solar farm, you can have it up and running in 1.5 to 2 years. So solar has a niche to play. There'd be no doubt that it's just not the same scale that we're seeing going on in Australia at the moment.
Oh, fascinating stuff. All right. Well, apologies to everyone who's a question I didn't manage to squeeze in. Some fantastic questions there. And thank you for everyone tuning in for this. Very special thanks to Mike Fuge for joining us. Really appreciate your time and your insights and all of the wonderful knowledge you've dropped on us today. That is pretty much it, everyone. Please do check out the Sharesies Daily Financial News Podcast Recap. It's about 10 minutes long, published at 5 p.m. Monday to Friday on Spotify, Apple Podcasts, and Google Podcasts. And we will see you back here next Thursday for another Shared Lunch. Next time, we'll be joined by Mark Peterson, the CEO of NZX Limited. He'll be talking all about what the NZX does, how it works, and of course, answering all your questions. Enjoy the rest of your week. Stay safe.
Ngā mihi nui. Thank you.